Welcome back, everyone. Hi. Um, in my okay, in my last video, I talked about point of interest. Basically, that I traded from a point of interest. Video wasn't very clear, but basically what I was doing is I was marking any structures that did anything special. So um, let's say you have a zone that broke structure like right here. There's a massive impulse, as you can see, to the downside. We're on 1 hour right now. So basically this would be an important zone, right? And over here as well, massive impulse, important zone as well. If you go on a lower time frame, there's probably like a zone over here that actually broke this structure. And if something breaks any of the structures, it can react to it basically. Because right here you see as well, it doesn't come all the way to this zone right there. It goes somewhere over here. So there could be a zone over here that broke this internal structure, right? So the whole point of these points of interest are basically marking unmitigated zones that really achieved something. Because there is no point, like this is mitigated, there's no point in marking this. This is mitigated. And basically what mitigated and unmitigated means is the price efficient or not. So let's say, wait, let me look. Like this zone over here. The price started to go up again over here. But as you can see, I think it tapped into the gun box levels as well. Let me check. Yes, it did. So basically why I use this gun box is to see if it really touched inside the levels I wanted to. These levels, 0.382, 0.5 and 0.681. I check if it has been touched. And if it hasn't been touched, like this one over here, and this candle wasn't there, I would have said like, okay, it could possibly still go in there. Because I kind of want to see these levels touched, and then I'm sure that most of the orders are gone there, and this touched the zone and will start going down again. But right now I was learning these points of interest a bit better. I do have to say I'm not a professional trader, as I said in my last video. I'm still learning, and I might get some words wrong, or me explaining stuff might sound a bit shitty. But yeah, I'm trying just to tell you guys and show you guys what I learn, how I learn it, and yeah, basically helping new people understand it better as well. Because if you most of the times you watch a course, sometimes it's too hard to understand because someone that has a lot of knowledge about it is talking about it, so it's going to be using more difficult words and other shit like that. But I'm really talking about this right now as a noob from my standpoint. I don't know if that's proper English, but okay. But yeah, so basically when I find something new, like this points of interest, like I already knew about it, but I'm now really using it. It's basically supply and demand. But yeah, I'm using it in a bit more advanced supply and demand, I guess, because that break of structure zones was also a big something that I found out. I didn't even know about it. So let's say there's here, let's go 15 minutes real quick. No, I don't see a zone over there. Oh wait, I actually saw one. Wait. Okay, right here. So you could say the market would react to this zone, right? Since there is, it broke this structure right here. Wait, mark it properly. So sometimes you could think, okay, this is the demand and over there is the supply, right? But this point could also be very interesting. That's why it calls a point. It's called point of interest, because over here it broke this structure right here. So it could mean that we go down over here and then we go up again to test this supply or even break the supply. But yeah, so that was basically point of interest stuff. Let's now talk about yeah. So when I learn something new, I was saying that I think when I learn something new, I always am too focused on the new part, I noticed this. I don't know if more of you guys have this, but when I learn something new in Forex, I'm really focused on only that one thing, like let's say the point of interest or whatever. But right now I'm trying to get all of the things I learned in mitigated zones, liquidity, supply and demand, sessions, basically everything. I put all of that into a strategy, break and retest as well, those kind of things. It's really hard, I think, for a starter to focus on everything because you have so much information. But that's not really a problem. Like, you should just give it time, and if you find something new, maybe do focus on that for a little while. And when you're good at it, then put it all together, because in Forex it's really important to put all of your strategies of everything you learn, put it all in one pot, and then trade from there. And also something I notice as well, people can tell you everything, literally everything, but if you do not test it yourself or notice it for yourself, it doesn't mean shit. Like, someone could tell you, yeah, trading like that won't be profitable for a long time, or someone could tell you, yeah, going for those big R's is not really will not be profitable. Like, you will, in the long run, you will get out. Like, you need to see that shit for yourself, and then you will like really know, because people can tell you something, but if you haven't experienced it yourself, I think you will not really understand it, or your ego is just too high to understand it. But then again, obviously try to listen to what people tell you when they're more experienced and do those things. But the best way is obviously noticing it yourself and seeing it yourself, because then you will really react to it. But yeah, a mentor is really important in Forex, basically in anything in life. But okay, we're on NZD USD. I haven't backtested this one yet. I think only once. But yeah, I'm gonna show you guys what I do and why I do it. Okay, first I mark my arrows where there are any breaks. Like, I'm right now I'm on 1 hour. Wait, let's do this on 15 minutes actually. That's better. I'm going on 1 hour to mark my zones. So let's say we could take this as a break of structure zone. Oh wait, we need to look at the market first. Is the market bullish or is it bearish? Okay, it's bearish overall. We can see that on a 4 hour already. Like, it's very, very bearish. So it could possibly tap into this zone, but maybe it has mitigated this zone, because I don't think any of these candles have been in the levels it should have been in. So let's check that. Oh yeah, as you can see, this one has been. So maybe it was mitigated, or it just retested it, took this liquidity, and then it's gonna drop down. Or maybe we test this one. Doesn't really matter. I've marked them, so we know the overall trend's bearish. We're in a correction upwards, so basically this is the impulse, right? Because we're going down, so all of this right here is what we call impulse, because it's bearish. And then all of this right here, I think so. I think this might be the impulse then, because when it's bearish, you call this impulse. If it's bullish, you would call this the correction downwards, I think. And then this right here is the correction, because it's basically correcting the price, and then it's going to drop more. So basically what we're seeing right now, it doesn't mean right away that this pair is bullish, right? Because it may have broken some structures over here, but it's just correcting upwards, and then it goes down again. I'm sorry if this is going to be a long video. I'm just trying to explain everything properly, how I look at it. So we marked out some zones. It has already this zone we can remove. Do we have any others? No, these zones are pretty important. And then we have a zone over there. Has this been mitigated yet? Yes, this has been touched. This one has not been touched, so it could react nicely to this. Okay, I'm just marking these zones so I know when there is something important going to happen. Right now I'm going to 15 minutes. And now I check all the breaks. Literally, well, almost all the breaks. Got a break right there. I don't care what minute or what time frame these breaks are. I'm just marking them. Got a break over here. And why I do this, then if there's a break, I know we got liquidity over here. We got liquidity over here. And we got liquidity, well, volume. We got volume, I think I should call it. We got volume over here. Because this leg is where, or this leg basically, is where this structure broke. And then this leg is where this structure broke. This leg is where this structure broke. Now I know every leg and every where a lot of volume came in, and there might still be liquidity to then move up again or something. And this is where we start going down, right? This is where we break downward structure. Like so. Like so. And what could we... Yeah, then we can break this over here, and we can break this over here. Yeah, when we get to that point, I will mark more structure points over there. And we could break this to the upside, and we could break this to the upside. Okay, so let's now start trading. We have all my points confirmed where there's like structure breaks and all that kind of stuff, and that will help me in the future when I start to trade. And keep in mind, these sessions is basically what I trade, and I will skip for a little bit because, okay, this structure point is now broken. It's 6:30. I need it to be a bit later since I do not trade at these times. 8:15. Okay, this is basically where we could look for trades. Then I would mark it swept this. Like over here, it took this zone where basically this structure broke, right? So it reacted to this. Asian went a bit higher for liquidity probably, and now it's going down again. So we broke this structure over here. Let's get this arrow over there. And now we could break this. So now we just look for breaks because it's almost London session. And that's where it reacted to this zone where I already wanted to put one. Right here. Could still break under, but we'll have to see. Okay, it's in a zone I've marked now. And London will open in half an hour. Now I'm going to look at this candle because this candle rejected, and I'm going to see what the next candle will be. Okay, the next candle is also not really what I want to see. If it was a very bullish candle, I would have gone on to lower time frames and maybe check if I could take a trade. No, it looks like we're still going bearish. Yep, there it is. Okay, so basically what this is telling you, like if I see a candle that rejected and then a bullish candle, it's basically telling me, okay, there's volume coming into the market and the order flow is up. Like it wants to go up. And then it could have swept this. So maybe if I go on lower time frame, I would have targeted this because it might go for the Asian high over here. Or I would have targeted this, but I think this is the safest place. Because normally you would think, okay, we're going up, right? And I still got some zones over there. I still got some zones over there. You can do that, but I have like stop losses of like 3 pips, or I don't know, maybe my entry was over here. 3 pips, 5 pips. Let's do 4 in the middle then. Then I would have targeted like so. It's still 2.5 R, right? We don't need that high R. We just need to stay consistently profitable. That's what we aim for. But now it's breaking down. So can you please not do this? For K&L. All right, okay. I go in 3 minutes. I check the zones. I do not really see. Yeah, we have this extreme zone. There's a little bit of liquidity. Well, right there, I would do it like this because this is the whole consolidation. So it could even get tapped out because there's some consolidation happening there and still a wick over here that it could take. But let's look at 1 minute. This one has already been mitigated. But I still want to try and get this one. It has also been mitigated, and that's why Normally I would have been, I have 3 screens, right? And normally I would have the 3 minutes, the 1 minute, and the 50 minute, because if you could, as you can see, this broke it, right? So normally I would have done this. Let me just play it back. Okay, these candles have broken my line, right? So this break basically means for me, okay, it's gonna break. It's definitely gonna break, right? So what you then do if you see this break, because you could say like, oh yeah, but it's not really you need the 15-minute candle to close, blah blah blah. But that's not important for me, because right now I either take this trade and maybe it comes back and I take this trade. It doesn't really matter. I can take 2 or 3 trades in one of these moves. Like 3 is the maximum for me. But the Asian has just gone under this over here. We see a massive impulse. Plus London just opened. So that means a lot of volume will come in the market. The earlier you get into this market, when you see structure points being broken, this arrow right here, the best is going to be for you, because it will probably mean it's going towards a zone, and that zone might be far away or close, but we are going to take a look at probably the closest one. But what I would do if I seen this on one of my screens on the 1 minute or 3 minutes, I would have put a zone over here, because you see this bullish after these bearish candles, after these imbalances. That's why I put it, and then I put the gun box, and then I put it on this level, the first line always. A little bit above the stop loss. Oh wait, what am I doing? And then this would tap you in right away. So actually as soon as you see this candle drop down again under this one, it basically confirmed, because this one is filling this, right? Then you see a bearish candle again that breaks under. So a bearish engulfing means that we could still be going down, and it still broke this line. Right away, put gun box on here. You need to be fast and put your order on here. Now let's check what we're gonna target. Okay, I already see that it's dropping way more, but that doesn't really matter. Let's see. It broke a structure point over here, and we have some imbalances over here, right? So what we do, just to be sure, we target these candles, because this is where a structure break happened. That's what I just marked, right? So we're gonna take it till there and see how it goes. And it hit TP. But did you see this reaction? My TP should have been a bit better, because I did it on the body, almost on the body, not on the wick. But as you can see, this was a pretty important zone right here where it broke this structure, because we got a massive impulse up right away. And that's why you play it safe. Like, let's see how far it goes. Yeah, it still goes a bit further. As you can see, there's also some imbalance over here where it's reacting to. But you could take it till here, right? To this zone that I marked. That's normally what I would have done. But just to be safe, since you're doing small stop losses as well, just target the next important zone where it broke the structure, or any important zone, because that way you won't miss out on. Imagine, okay, let's say I had my stop loss right here, right above the wick, and I hit TP. But imagine I had it all the way down, and this impulse would have gone all the way to my SL. Like, how many times have you guys had that it went back up again, and let's say it went to here and you didn't set a trade on this, and then it went down? You don't want to mess yourself up, and that's why you should really look at your targets and mark all these important structures out, because this is where a break happens, and I knew that, and that's why I set my TP till there, because you never know if it's gonna go way more down, you know? Like right now, let's check. Look, and that would have been your SL. And that's exactly what I mean. This is exactly what I mean, because this, you have your TP here, let's say a bit above because of the spreads. Oh, I'm going to take 11.5 R. Maybe if you manage your trade, you would have gone out over here. But this is what would have happened if you just let your trade run. You would have been fucked. You would have been fucked. And that's why your targets are really important. But yeah, that's basically what I wanted to show you guys. And as well, I think over here, wait, can I just press the 15-minute? Okay, the same, I think the same goes for this. Look, what I just told you guys, you see this zone, right? If you wouldn't see this. It's exactly the same. It reacts to it over here on the 50 minutes. You can see a rejection. Let's wait till the London is over, because I only take one trade per session. This would have been a 4 something. What was it? 4 something something. I don't know, whatever it was, 4.7 hour or something. I don't know. Okay, so this is where it stopped, right? This is where it broke this structure. On the lower time frame, because on the 50 minutes right now you see a wick, but on the lower time frame it broke this structure, right? And we see rejections over here, we see rejections over there as well. So this is now important to see if it either shows us the 2 candles that I want to see. So let's say if this shows a rejection right now and then a massive impulse, that's when I know, okay, in the next session we go up, because the next session is also in a half an hour. I know I just saw what happened, but that's basically how I trade, and I just skipped it to see if we would have hit this TP if you set it over here. But luckily we set it over here, so that's nice. But anyways, okay, now you see this, then would have been a bit scared. And then you see this, wouldn't do anything now as well. But then you see this. So you could say, like, this also broke this structure, and then over here, on lower time frame, it also broke structure. So let's go on 1 minute real quick. What does this look like? All right. And if you want to, you could wait for a 50-minute candle to break it, but that wouldn't have worked. And that's why I go on lower time frames, just to see when it breaks, because here it breaks. You take your unmitigated zone, that's right here. This one I would have missed though, since I put it on this line. And that's why you might want to take the 3 minutes as well, because let's see how the 3 minutes look like. That would have been missed. That would have been a miss as well. Or you could have taken this leg if you want to, because that's the imbalance one, the 50% body candle. Then you would have been hit, but you got a bigger stop loss. It all depends on how you want to do this and everything. But yeah, what I would have targeted over here was this one over here, this zone. I wouldn't have targeted any further. But yeah, this one I would have missed because of I would have taken the mini candle over here, and it would not have been hit. But that's not really a problem. But when I miss this, I'm not gonna try and go in again. Maybe I would have tried on the let's check the 5 minutes real quick. Maybe I would have tried on this candle, because over here it really broke. But then again, I wouldn't have been tapped. So this is just a miss that I will accept and then set trades later again. But yeah, so basically what we're doing is we're getting important point of interests, right? Where we can see some nice movement happening over here. Then we know, like, okay, we might be in a correction or we might be in an impulse. So I check on the higher time frame. First thing I do, check on the higher time frame. Where are we at right now? We had the correction, we had the impulse, and I think right now we were in a smaller. Can you stop doing this? Jesus fuck. We were in a smaller correction basically, because this is basically the smaller correction, right? And that's where I'm trading on right then. And we marked our structure breaks. We didn't mark them by zones or anything. We just marked our structure breaks then, because then we know where we could target our stuff. And what we then do on the lower time frames, we have our even smaller structure breaks, and from those structure breaks we trade. From all those smaller structure breaks we trade. So over here, structure break. This was on the 1 minute, right? Yep. Okay, so this session just started. If you guys want to use this as well, it's called Asian session range. So you can see the Asian session, London session, and New York session. And when these sessions open, that's where you want to look for breaks. Like if a break happens over here and there's like a massive impulse and the breaks happens over here, jump in right away. You could also set this one, like set a trade here and set a trade on the extreme, because if I call this the extreme, like the zone all the way above, because this is where the whole impulse started. If it doesn't hit the zone that broke the structure, because this is the zone that broke this structure, right? Because we marked this with an arrow. If it doesn't take this zone, just try to take the zone above. And I think that was basically it. I'm still learning this myself as well, so it's really hard to explain it to you guys properly, because I do not even have a proper trading plan for this yet written down, but it's all clear in my head, and I just wanted to show you guys straight away, because I will be making videos of everything I'm learning. It's for myself in the future, and also for you guys to maybe pick something up or maybe something useful. So yeah, I hope this helps you guys, and I will be here again when I learn something new. It's basically every day, but when I learn something important, then I will share it with you guys. So see you.